Hello and welcome back to Your Money and Real Estate. We have Jennifer on the line, and Jennifer had a very interesting question. It was very actually an open-ended question, Andrew, where she was, inquiring. She's got people who invest in real estate, but she's saying kind of like, how do I get started? We touched a little bit on joint ventures, but it's almost like I would think, writing a business plan, doing different avenues. So why don't you take it, Andrew, maybe lead Jennifer, or a bit down the.
Okay. Jennifer, are you still there?
Yes, I am.
Awesome. Okay, so your question, it's a very good one, and one that many people, I'm sure, have, and I get asked this a lot, is, how do I get started? I don't want to put a lot of money into it, but I want to start buying into rental properties. I think it's a great avenue. We talked a little bit about the idea of joint ventures, and yes, it's definitely something that you could do. You could look to find somebody who has some money, who'd be looking to invest with you, or really doesn't want to get involved with the process and is willing to take a risk on you, per se, because they believe in your capability of doing it. So once again, like I said, the key is just to do some research, get educated on it. There are very creative strategies out there. Rent to own is one you might have heard of. I'm not going to go into great detail right now about what that is, but there are ways of getting into a property with nothing down, and basically finding somebody else to buy that property from you and making a return on that. So would I recommend, if you just want to get started, should I go out and buy a rental property tomorrow? I wouldn't say that that's the case. I think that the best way to do it is to start talking to a few different people, visit a forum. We're actually offering a forum next week, the Pro Funds Forum, and that's a venue where these type of questions can get answered in detail. And it's also a venue where you can learn how you can make money in real estate, and it doesn't necessarily have to be buying a property. It can be investing in other ways into real estate.
Okay, Jennifer, I hope that answered your question. And Andrew, we certainly touched on a lot of different aspects of buying your first rental property. You mentioned the word joint venture, and I know that a lot of people talk about OPM or other people's money. Can you go into a bit more detail as to how can that realistically be applied to someone like Jennifer, for example, who may wants to tread lightly? Would that be something that you would recommend, or maybe buy a few more properties? But what would be the strategy for that?
With other people's money, it's absolutely. And I'm glad you asked about that, because that is the most crucial thing. And Robert Kiyosaki, obviously, his mentality is, buying things that create cash. And it's okay to use other people's money. In fact, it's encouraged, because if you're only using your own money, Mark, you're going to run out sooner or later.
Right.
But other people's money is infinite, because I can just keep finding new people and I can keep finding more money. What I would suggest is in getting started, and as you're developing your knowledge base, start with people who know, like, and trust you. Family members would be a first. If you know a family member that has an RSP that's performing poorly and you want to start investing in real estate, you could potentially use that money if you offer them a return. So say you offer them 5% because you can make 10.
Sorry, I didn't mean to cut you off, but you're touching on something that's kind of exciting me a bit here. You're mentioning using an RSPs. Now, there's probably a lot of people out there that have RSPs that are getting pretty poor returns. How would someone like Jennifer, or someone out there, anyone who has RSP, say, hey, I want to buy an investment property? Could they use their RSP?
Great question, Mark. Yes, they could use their RSP, but to actually buy a property, they would need to take the money out of the RSP first.
Okay.
So obviously, with the tax implications of that, a lot of people don't want to do that, but there actually are other ways of investing in real estate through RSPs, and they don't have to actually take the money out of the RSP. They can leave it in the RSP and actually lend private mortgages, which is something that I assume we're going to be talking a little bit more about later on in the show.
Now, I do know, can you discuss a little bit about, because obviously we have first home buyers, we have people who are renting, we have people who have investment property. There is is it $20,000 that you can use your own RSP as a down payment for a home that you own? Does that include that 5%? Like how does that work?
What you're talking about is an incentive from the government for first-time home buyers that they can actually withdraw their RSP without a tax implication.
Okay.
Provided that they pay it back over a 15-year period.
So it's like they're giving themselves a loan?
Yeah, they're essentially loaning themselves money out of their RSP to buy their first home.
Okay.
once again, Canada is great for this, very pro home ownership. The government has all kinds of incentives to help people buy their first home.
Well, with the cold winters we have, people want to have a roof over their
People want to have a roof over their head. It changes a little bit when it comes to investment properties.
Okay. Can you do the same application, take your RSP out, buy an investment property directly with it?
No, you can't do that. So the key thing to RSPs is they have to be arm's length, meaning that you can't lend money to yourself. There are other tricks within the bank that you can lend money to yourself. Once again, it would be secured. But what I'm talking about is taking money out of your RSP in a legitimate way to lend it to somebody, but there's no tax implication there. You can actually lend somebody money, make a return, and leave it in your RSP.
So if someone, let me just take this a little bit further then. So if someone has, we'll use Jennifer for example. Someone goes to Jennifer and says, here, I have $40,000 in an RSP, and they give it to Jennifer. She could use it to buy an investment property?
Yes, Jennifer could use that money to buy.
But the person lending the money can't own it. Is that what arm's length means?
Oh, okay, I see what your question is.
Like the relationship there, like brothers, sisters, or like family members, can they all just pool their money together and buy an investment property?
That's actually a great question. I've never had that exact scenario of people trying to do that. Something I'd have to look into and get you a more specific
You mean to tell
answer.
me I stumped an Ivy League guy? Holy crow. All right, well then let's get back to using the RSP as a arm's length, second mortgages, or the process of that.
Let me just give you a story, Mark, because that's probably the easiest way of describing it. So we work with a lot of investors, and as I mentioned before, these are the type of people who want to grow their investment portfolio.
Okay.
So, John is one of my clients. John has 3 properties, and he wants to buy the 4th, but he doesn't have the cash to do so.
Okay.
The thing that John does have is he has equity in those 3 properties, and that equity is something that can be secured. So what John does is he comes to ProFunds and he says, hey, I'd like to borrow some money against my 3 properties so that I can buy a 4th. We would in turn look to one of our investors who would lend John money secured against those 3 properties that he currently owns so that he can buy the 4th property. And go ahead.
No. So I'm just trying to get you have a guy with already assets and he's got equity in these properties. Mm-hmm. You would then find someone else to lend that guy the money, which basically is secured by his 3 properties. Yeah. And that's a second mortgage, or how
it could be a second mortgage, it could be a third mortgage, and that could be RSP money. So our investor might have RSPs sitting there, and say they were in stocks, and for the last 10 years they've been losing about 1 or 2% per year.
Sorry, didn't mean to cut you off, but we have another caller. Her name's Trudy from Newmarket. Trudy, can you hear me? Go ahead.
Yes, I would like to know, I have RRSPs, and can I take those and lend them to myself on a low rate for my mortgage?
Andrew?
Trudy, there is a way to do that. It has to be secured by real estate. It actually can only be done with locked-in funds. So if your RSPs are locked in,
that's a lira?
A lira, yeah, that would be called a lira. If they're just regular RSPs, you actually can't lend them to yourself. We've done creative strategies where we had 2 mutually agreed parties that both lent to each other. We had 2 clients that both had $80,000 in RSPs and wanted access to it, so they made an arrangement to lend it to each other.
Right.
That can be done, but no, you can't lend it to yourself directly. But if you had money in those RSPs, what you could do is you could lend it out and earn a generous return, anywhere between 8 and 14% per year.
So Trudy, I guess he's saying that it can't be direct, but does that answer your question at all, or are you looking?
My question, I can't be direct, but I can lend it to somebody else, and they can lend it, and I can make money that way and get it back.
Absolutely. So there's a way to make money from it, but to take it out directly, the only way to do that is to pay the tax on it and withdraw it from your RSP.
Yeah, and we all hate paying tax. So Trudy's touching on something that I guess is probably, everyone wants to say, gosh, I got all this money in RSPs. I'm getting 3% return. I'm getting 1% return. What kind of returns, if someone were to take, like Trudy, were to take her investment or her RSP and put it give it to another investor and put it on a home? Would they get 3%, or how does that work?
Actually, Mark, another great question. Typically, they're actually going to get much more than 3%, and that actually sounds too good to be true to a lot of people, but it's really not. In the private mortgage market, your returns are going to be anywhere between 8 and 14%, and on occasion, we even have deals that are more than that.
That's fantastic.
And think about how many people do you know that come to you and they're standing around in the workroom talking about, wow, my mutual fund is making such great returns now, and wow, the stock market is really booming right now. That's a conversation that most people won't often hear. Go ahead.
Andrew, the phones are ringing off the hook.
They're ringing off the hook.
Which is a good sign. We have Robbie on the line. Robbie, can you hear me? Go ahead.
Yes, I can hear you. Can you hear me?
I can.
Yeah,
What's your
hi
question?
there. Well, first of all, let me tell you I'm really enjoying your show. I have a question for Andrew. I'm a little bit like Jennifer. I kind of don't feel that I'm where she is, but I don't know if I got the answer that I was looking for through her question. So I'm in a position when I'm in a property which I've almost paid for, and I would like to know a little bit more about buying an investment property. However, I just want to point out, I know so many people that live the average life of Joe, whatever, earning $700 a week, but they own 5 or 6 properties in the Newmarket area that they rent out. I know there's a way to do this. What I'm looking for is really a simple term answer in layman's English that I'll understand, and I don't mean to be condescending when I say that. It's just that sometimes you use terminologies I'm not used to, and I don't totally understand. But what I'm looking for is an answer is, where do we start? What do we do? Where do we start as a single person? And I'm not looking for an investor to come into it with me.
Okay. Trudy, that's an excellent question. Andrew, fire away.
Awesome.
So, Robbie, I've just got the names mixed up.
Is it Robbie?
Yeah.
Robbie, thanks for the question. It's a good one. It's a tough one for me to give you a firm, this is what you should do. It really does depend on your risk tolerance and what your goals are. However, what I can tell you is that there are some great opportunities for you. The number one thing that you need to do if you are serious about this is you need to get access to some of the equity that you have in that home. So if you've almost paid off that mortgage, we have several clients that are in that boat that actually refinance, and they can take out up to 80% of their home's value, and they can invest that. So just to put it in perspective for you right now, we actually have access to historically rock bottom rates. I mean, we're within 0.25% of the lowest rates we've ever seen in Canada, and 5-year rates at 2.99. Those offers are just on their final days right now. But to be able to borrow money at 3% and potentially even lend it out at 12% in a very simple investment, which is a mortgage, that's an incredible opportunity, which so many people don't take advantage of. I have to say that I've had clients that I've worked with that have gone to coaching sessions through the various different groups that operate here in Toronto, and they just start taking all the equity out of their homes and investing it into mortgages. And I have a client that's lent out over $300,000 in mortgages that he took out of his home, and he's making over $6,000 a month in cash flow from that.
Andrew, we can continue on with Robbie's question. We're going to take a quick break. We'll be right back on Your Money and Real Estate.